Hello, good evening to the respected gathering. This is Gitanjali Matai, Executive Member of Club Inmos from Birla Institute of Management and Technology, Greater Noida. Hope you are all doing well on this chilly evening. Thank you for your registration with us for this insightful session, may it be from BIMTech or from industry. On the behalf of entire BIMTech family, I take this opportunity to welcome Mr. Manik Nehra sir from Bajaj General Insurance, Mr. Manik Nehra, Head Reinsurance, Property, Large Risk, Marine and Surety, Bajaj Allianz General Insurance. Mr. Nehra has been associated with Bajaj Allianz General Insurance for 15 years now. He has worked in various capacities in the organization before taking the role of head of reinsurance in 2017. Mr. Nehra is an MSc graduate in Insurance and Risk Management from CASS Insurance Business School. He is also the member of CII UK. I extend my gratitude to you, sir, for taking out your precious time from your busiest schedule to enlighten us with the knowledge about surety bonds, which is the new product launched by Bajaj Allianz in the industrial Indian insurance market context. Also, being the student of insurance domain, we understand this will play as a substitute of being the bank guarantee in the infrastructure and nation building. And your overall experience, we'd like to know about that, sir, also, which will help us learn and develop necessary skills. Also, we have our three faculty members from WIMTech. Professor Manoj Pandey, sir, from life insurance sector, and also he is our mentor for the club in MOS. And Professor Pratik Priyadarshi from general insurance sector. I request everyone to mute their mics and sincerely listen. And later on, we can take your questions and answers in the chat window so that you can ask your queries to our esteemed guest of honor whenever you are allowed to do so. So it's a delight to have you, sir, today. Now the platform is all yours. I welcome you, sir, to begin.
Thank you, Gitanjali, and thank you, BIMTech, for giving me this opportunity. Now, I'd like to start with the presentation.
Yes, sir.
Is it visible to you, Gitanjali?
Yes, sir, it is.
Thank you. So I'll start with what was the need for surety insurance. So if you will see, India is expected to become the third largest construction market. Almost around a US dollar 1.5 trillion investment is coming into infrastructure over the next decade. If we just see the construction companies alone in 2019 had a bank guarantee of around 1.7 lakh crores, and that is expected to grow to 3 lakh crores by 2030. Given the enormous amount of infrastructure cover needed, it was essential for the government to look for variable options to be provided to the construction industry as an alternative to bank guarantees. So the government and along with the regulator IRDAI took this initiative and allowed surety bond insurance from 1st April 2022. Now coming to surety bond insurance is nothing new. If you see, this has been present in various developed markets. Just try to give you an idea of around the biggest market is the US market, roughly around the premium is $7 billion. Then if you'll see the other developed markets like France, Germany, Spain, Belgium, UK, Ireland, the worldwide market premium for 2021-22 stands at roughly 30 billion US dollars. So it's quite a big surety insurance is quite big part of insurance. Now, what are surety bonds? So surety is a form of financial credit known as bond guarantee. Now, it involves three parties. One is the principal, who is going to be the beneficiary if the bond is called upon. then the contractor, and then the surety provider. The surety provider is basically the insurance company. What does it protect? A surety bond protects the principal, the party to whom the bond amount is going to be paid in the event of a default, against the losses that result from contractor's failure to perform its obligation. So contractor's obligations are going to be mentioned in the contract, which is signed between the principal and the contractor. And if there is any default in that, then the bond would be called upon and the payment would be done under the bond, and the beneficiary would be the principal. Secondly, the surety provider insurance company assumes the liability if the contractor cannot fulfill its contractual obligations. How does surety bond works? So surety bonds are designed to ensure that the contractors act in accordance with certain laws. If the contractor default on those terms, the harmed principal can make a claim on the surety bond to recover losses incurred. Lastly, and most important, the insurance company then has the right to reimbursement or subrogation from the contractor in the case of a paid loss or claim.
We are still viewing the first slide.
Sir?
Yeah.
I'm not able to hear. What are you saying, sir?
Sir, are you, am I audible, sir?
Yes.
Sir, we are viewing the first slide of the PPT. So are you scrolling down or we are on the first PPT, first slide only?
I am, I've gone ahead. You're not able to see that?
No, sir. We are on the first slide only.
Okay, let me just then remove it and. Is the slides now changing for you?
No, sir, it's not visible to us.
You can just remove it for once and maybe re-upload it. Or should I do for you? If you
Yeah, that would be helpful if you guys could.
Okay, okay.
But sir, in the meantime, Professor Chattaraj has joined us.
हाँ सर को तब तक आप इंट्रोड्यूस कराइए.
Manik, we have with us Professor Abhijit Chattaraj right now. He is chairperson of the IBM program. He is also the Dean Students Welfare at BIMTech. He's also the brand ambassador of CII for CII UK in India. I mean, honestly speaking, if I were to start the proper introduction,
no, sir, don't do it, sir.
We would be intruding upon your time.
So thank you so much. Thank you so much for Manikji. Thank you so much for sparing time. And it will be a very, very interesting thing. It's a very new thing, and every one of us is very keen to understand it. Unfortunately, I have another meeting lined up, so I thought I'll just show up and extend my thanks to you.
Thank you, sir, and pleasure meeting you.
Kindly excuse me. I have another meeting lined up. Thank you so much, sir.
So Manikji, I think you can see the slide now. So
yeah, I can see it. So can we go to the benefits of surety?
Maybe you can repeat it a little bit for the benefit of the audience from this slide itself.
So over here, basically what we were saying that from 1st April 22, the surety insurance market was opened up and in India. And if you see, surety insurance is not new. It is present worldwide, especially in the large economies, the developed countries. And US is the largest market with a premium in 2021-22 of approx $7 billion, followed by France, Germany, and other developed countries like Spain and Belgium. The total market size of surety insurance worldwide was around US dollars $29.5 billion. So surety is quite old, has been present, and now it has come in Indian shores also. What are surety bonds? So basically, surety is form of financial credit known as bond guarantee. The transactional, so the transaction always involves three parties: the principal, the contractor, and the surety provider, which is going to be the insurance company. The surety bond protects the principal, the party to whom the bond amount is to be paid in the event of a default. That is basically the losses that result from contractor's failure to perform its obligation. The surety provider insurance company basically assumes the liability of the contractor if there is a breach of the contractual obligations of the contractor. How does surety bond work? So surety bonds are designed to ensure that contractors act in accordance with certain laws. They provide the principal with financial guarantee that the contract and other business deal will be completed in accordance with the agreed mutual terms, which means the underlying contract between the principal and the contractor. If the contractor defaults, then the harmed principal can make a claim on the surety bond to recover the losses incurred. The insurance company then has the right to reimbursement and subrogation from the contractor in the case of a paid loss or claim. The benefits of the surety bonds. So it is one of the most cost-effective ways to finance contract security obligations. So the benefit would be that it will free up funds for the contractor. The contractor can use those funds to increase its revenue by bidding for additional tenders or new contracts. It could also help the contractor for saving of its bank limits for other purposes such as working capital or to fund expansion plans or to reduce debt. Surety bond, certain forms of surety bond can act as an alternative to bank guarantees. Now, what are the BAGIC offerings? So first we need to understand there are two forms. One is the conditional form and one is the unconditional form. Unconditional form is basically any default leading to a liability on the principal debtor. And the principal debtor, I mean the contractor, to make a payment under the contract shall be settled on demand. So it's very similar to a bank guarantee. A bank guarantee is on demand. So if the principal says there is a default and he submits the bank guarantee to the bank and on demand, the bank pays the BG amount. Similarly, over here, if unconditional form is there, the surety bond would be submitted to us and they would demand it and we would make the claim payment. There is not going to be any questions asked as such. Whereas in a conditional form, any default which is leading to liability on the principal debtor, which is the contractor, to make a payment under the contract will be settled only at the discretion of the surety insurer based on the facts and circumstances. So the difference is the underlying contract remains the same, what we are covering. The definition of default is the same, but that default in a conditional form, we will see whether it's an admissible default or not, whether there is a default. Once we agree on the default, then we would also assess the quantum. What is the quantum of loss? So the maximum value which would be paid would be the bond value, and depending upon the quantum, if it is the assessed loss is less than that, then that portion would be paid under the surety bond. So once we are clear on the forms, on these forms, we have 3 products right now, which we are offering. Next slide, sir. So the first one is the bid bond. So the bid bond is very similar to a bid guarantee, which currently the contractor needs to give to the principal when they are bidding for any of the project. So basically, it is an agreement in which we are guaranteeing the owner, the principal, that the bidder will enter into the contract if he wins the bid and ensure compensation if the bidder fails to accept the contract. So basically what it means is when they give a bid guarantee, so if they are the L1 in a tender, let's say it's a government tender, and if they are the L1, then a LOA is awarded to them. And after the LOA, within 30 days, they sign the contract that yes, now we would come and sign the contract and implement the project. At the time of signing the contract, they need to provide a performance guarantee also. So the period depends upon each principal. Let's say an example of one of the government agency, NHAI, they give normally 30 days. So in 30 days, you have to provide a performance guarantee. Normally it ranges between 5 to 10%. And if they are not able to provide that performance guarantee after winning the LOA, and so they will not be able to sign the contract, and the bid bond will trigger in that scenario, and there will be a payment under the bid bond. If they sign the agreement, then the bid bond gets over, and now the performance bond comes into place. So the performance bond is very similar to performance guarantee, which is basically provides an assurance that the principal will be protected if the contract defaults on the contractor defaults on the bonded contract. So now once the contract is signed and for the complete project period, there is a performance guarantee which needs to be provided, and similarly a performance bond will be given to it. Then coming to the third type is the maintenance period. It is basically the bond gives financial protection to the principal from the cost to remedy defects in a completed construction project by the contractors. So the contractors are also, certain projects also defines that the contractor is responsible for the defect period or the maintenance period, and for those specific in that event, a maintenance bond is issued. So these are currently the three offerings which we are offering. Now, how to execute? So once all the commercials, the analysis is done, then at the time of execution, a general agreement of indemnity needs to be signed. It is in favor of the surety insurer. It is signed between the contractor and the surety insurer, where basically it says that the contractor will indemnify the surety insurer against any or all losses arising under in connection with the surety bond. So each surety bond will come with a general agreement of indemnity. Now, as collaterals, so it depends upon general agreement of indemnity and at the sole discretion of the insurance company. And sole discretion, when I say, majorly depends upon the credit worthiness of the contractor, that whether we would only accept corporate or a personal guarantee, which is like if depends upon the organization, the guarantees would be taken by the promoter or the majority shareholder or the ultimate majority holding company if there is a JV in favor of the surety insurer. So it gonna be part as a collateral, will be part of the general agreement of indemnity. Or there could also be first charge on fixed deposit receipts. So the FDs, we will take the lane over there, which shall be free of all encumbrances. Now, in an unconditional bond, there is basically the three major exclusions, and these three exclusions are part of the underlying contract also. So what we are basically trying to say is that when we gave a surety bond, the underlying contract was provided to us. Now, if there is any amendment to the underlying contract later on, or any modification to the underlying contract between the principal and the contractor, then it needs to be informed to a surety insurer because his risk could change, and that's why his approval is necessary. Secondly, if you will see force majeure is not responsibility of the contractor. So it is like not in his control, flood, AOG or other things. So a BG is never called upon. So if there is a force majeure event, that cannot be covered under the same, as the underlying contract also clearly excludes and states that force majeure is not the responsibility of the contractor. Third, since we have taken certain collaterals as the guarantees, the corporate guarantee or a personal guarantee, now if there is a change in control of the contractor during when the bond is active, then it needs to be informed to us because the guarantees needs to be replaced. So any change in control if it is not informed to us, then the bond becomes void. So these are the major three exclusions. Now, how do we assess Now, what is the underwriting factors? So in a broad way, I just wanted to explain was the contractor experience is the most important thing. Now, how many number of years he is in the industry, the past experience of the contractor. So you would want to know what are the type of the projects he has done, the project which he is now bidding for, or the performance guarantees required, whether he has the right skill level and the expertise. Then the credit rating of the contractor also becomes an important element, whether the contractor would have to showcase that they have sufficient funds to execute the project, to complete the project, whether what is their credit position, financial position of the company. Then the principal assessment also becomes important, that how financial soundness of the principal, how financial sound they are, what is the past behavior of triggering the guarantees, and experience in handling contractors. That becomes, because you want to know that is the principal very trigger happy, or they are looking for solution to complete the project. Now, the project duration. So how long is the duration of the project? That would also have an impact, because it increases the risk for you. Then the machinery. So from where will the contractor get the machinery? Whether he owns all the machinery or whether it's on a lease. Then the financial stability, as we were talking earlier, all key ratios like debt equity ratio, current ratio, the interest coverage. So the financial statements needs to be evaluated for a period of minimum 3 years. Insurer also needs to evaluate and see if the applicant has any kind of bankruptcies or lawsuit. Then also needs to evaluate the nature and the complexity of the project. The original contract copy, because that's the most important document for us, because over there, you know that what is the responsibility of the contractor, what has been agreed upon. So then it will give you an idea that what are you covering, in what instances a default can happen. Then, since delays are also covered, and because of delay, the bond could be triggered, you also need to check what kind of a regulatory approvals that are required and what are already taken in the project by the principal. Then the types of bond, whether it's a bid bond, performance bond, maintenance bond. So basically, in a nutshell, the underwriting process is majorly an evaluation of 3 factors. Those are the character, the capacity, and the capital of the contractor. These 3, if you are satisfied, you'll then it passes the underwriting risk assessment and the bond can be issued. Now, this was much more, I'll say, from Bajaj Allianz value proposition to our clients, that we are a strong group with a solid capital position. We have the highest solvency ratio in the industry because the regulator has stipulated higher solvency requirements. We have large capacity available for bond issuance, and we can develop tailor-made solution to meet client needs. Thank you.
Thank you, Manik ji. Now I'm stopping the presentation. I will go for the question and answer. Prateek sir.
Manik, thank you very much. This was much needed information that needs to be percolated down the line in the market as such. You know, there are a few doubts that keep on cropping into our mind. You know, one is the basic question: why the necessity of a surety bond when all was going well with the bank guarantee? Or was it not going all well with the bank guarantee? The question is that. Because when you actually come and have a look at the data that you were showing in the second and third slide, you said that about 2 to 3 lakh crores of bank guarantee is being looked forward to in the next 2, 3 or 5 years as such. Is it safe to assume that because the banks have not been performing well, therefore they have been substituted with the insurance company, wherein there is a certain probability that may or may not happen if a claim is to be paid?
Thank you, sir. So this was the question came to our mind also when the regulator came out with the idea of surety bonds. that what was the requirement? Why? Because the bank guarantee is already available in the market. Everybody has it. So why? How will surety bond work? So the point which comes down to is the investments are happening so huge and at such a rapid pace that it is becoming difficult for banks also to keep on extending bank guarantees. 2 points factors comes over there. One is the collaterals. Now, most of the people, you banks, as you are aware, they take 100% collateral. Certain cases more than 100% of the collaterals. For the contractor, it is becoming very difficult because most of them are already collateralized, fully collateralized. So now, how do they write more business or how do they grow their business? So one, the benefit as I highlighted for surety was that it free up funds for them. So that the debt reduces for them. Secondly, for banks also, BG is one of the most costliest instrument. If you see the RBI guidelines also, the amount of capital for a bank in a BG to block is very high. So a bank would always prefer rather than do a retail loan or personal loan or a home loan as compared to a BG. The earnings for a bank are much more there. So there, and that is why for the betterment of the industry and to free up funds for the contractor, the surety bond came into effect.
Excellent, excellent. In fact, that just brings on to the next point, which is that when BAGIC came out with this, and the thought process was very clear, as you rightly explained. I believe that this is going to be a shot in the arm for the government, the contractors, as also the insurer, because they are the three important stakeholders in such a proposition. Keeping that in mind, don't you think it would be a better proposition if we took this product down to the contractors level and explained the nitty-gritties? Because like me, there would be n number of people who would be having a lot of doubts.
So again, very valid point, sir. And that is what, since the launch, we have seen there has been a lot of interest. Most of the time, it is about educating the contractor, and not only the contractor, I would say certain times educating the principal also, because the practice was always of bank guarantees. So they say that the wording has to be exactly like bank guarantee. Now we are not a bank, so the wordings, the meanings are the same, but the wording might a little bit change depending upon, because we are an insurance company at the end of the day. So the principal education and the contractor informing them the benefits. One of the benefits which I think I couldn't highlight in the presentation was what is the benefit for the principal in this. Now I was having a discussion with one of the principals, a large principal coming out with lakhs of crores of investments. And I was asking them, okay, how many bids do you receive? And the principal told me only one company bids for it because the values are so large. And I was discussing that with the help of surety bond, if you just receive one more bid, do you create a competition and there is a saving for you? And the saving for them as a principal will be much higher as compared to what the BGs they ask for. And the principal was quite sure that if he receives 2 or 3 bids, there will be a competition and much better pricing will receive. He will be able to get. And that saving itself will run in thousands of crores for him. So when you tell the principal the benefits of it, they are open to. But as you rightly said, that education, that details of the projects needs to be discussed. One of the positive or the negative for us is being the first one also is that you need to educate more. You are single party and you need to give that experience.
Many, absolutely. And in fact, before Gitanjali and Pandey sir point out that I am hogging all the questions to myself, sir, the questions are open, and Pandey sir, all yours.
We have got 13 questions in QA session. You can see, so you can take one by one. I believe, let me take the first one. It's coming from Nehra. Incidentally, he's our alumni only, working in the same space. The question is, in case of unconditional guarantee, What is the time frame in which BAGIC will assess the admissibility of claim and come back with conclusion?
So when you say the unconditional one, it is basically a time period like today bank guarantees are also paid in 7 days, 15 days, 30 days, 45 days. That depends upon the principal requirements. As the principal contract would state, we would be making the payment in an unconditional because it's on demand. So there is no question to be asked by us. The principal decides, we make the payment. The timelines could be 7 days minimum, or the maximum could be 30 days. Now, the conditional one is the where our assessments would be required. And for that, right now, we are saying that once the claim process is also defined by us at the beginning along with the surety bond, and once we have the documents ready with us, within a period of 15 to 30 days, the payments would be done.
Okay. I would like to take the second question from Rishabh sir. Ritik sir. आप म्यूट पे हैं.
Just now, in fact, it's interesting to note that some of the questions are dealing with specific policy wordings, policy implementation, and nitty-gritties. So let me just see. The second question is from Rishabh Karnik. Of course, he is right. There's also an advance payment guarantee. That is very correct. His question is, if performance bond is issued and contractor is not able to issue advance guarantee, resulting in execution or performance delay, isn't it a risk?
Yes, it is a very big risk with that advance payment guarantee needs to be also provided. The thing is that again, it comes down to the accumulation. How many guarantees can one company provides to a single contractor for a single project itself? So it would create a very high accumulation for us. And that is the reason you will see that right now we have come out with 3 kinds of guarantees. And these 3 are the major ones which are required. And then the payment, the advance payment guarantee bonds, those can be still lower values can be provided through the BGs. And another thing is advance payment guarantees. If you see, they are normally when you are getting a 5% mobilization advance, you need to provide a 4% guarantee. So you are receiving the funds itself in a sense over there when you are providing.
Absolutely.
In continuation, Rishabh is asking what are the exact conditions in conditional bond. Exact तो शायद आप नहीं बता पाए, लेकिन अगर overall कुछ आप बता पाए हम लोग को general.
It's very much similar, sir. So like when I am talking about the conditional, we are covering the underlying contract. If you see the policy form itself, policy form is not very big, which we are talking, because there is already an underlying contract. I cannot change that underlying contract. I have to underwrite. Now, what I am saying is like in a fire policy or in a motor policy, the insurance company see the admissibility, whether yes, what is mentioned, the default, what you are saying, is there a default or not? So I, as an independent party, will evaluate that yes, what you are saying is a default, was part of the contract, that was the responsibility of the contractor, and I will just need a proof from you that okay, which clause, which has been triggered, what has not been done, so that you are calling the bond for. Once we know that, then we just need to assess the quantum. The quantum would be that, and anyhow you are doing it, because if tomorrow any principal is calling and saying there is a default, he would be explaining it to the contractor itself that okay, what is you have not done correctly, and we are just evaluating those things. What you have already informed the contractor, we are saying just inform us also. We will evaluate as an independent, and then we make the payment under the bond.
Fair enough. In fact, I'll just take on the next comment that has come in from Maya Pandey. Maya has been a good colleague of ours when we were working together in an insurance company. She's doing her research work at BIMTech. And I quote, "Thanks, Manik, for the crisp presentation. The insurers or reinsurers want a tailor-made client rather than providing tailor-made policy, just like trade credit? Your thoughts, she wants to know.
So, sir, I will suggest that because it's the beginning right now, and you are educating the client, then also what happens is today, let's see, we have come out for the road sector right now in the unconditional. Now, why there is a tailor-made policy we have come out with? Because if you see the RFP of the government organization, they come out with a bank guarantee format in the tender itself. It is pre-defined. So even if I want to make as what the contractor states, I cannot change it. The contractor has to give BG in the same format the principal asks for. So same way, my bond, once agreed by the principal, needs to be given in the same format because he won't ask for any changes. But we are more than happy and open to discuss with the principals beforehand whom we are approaching and showcasing to them that, okay, any changes if you require in the bond, we are more than happy to discuss that and devise a wording according to the principal requirements.
Another question is coming from, because we have seen at the time of launch, Gadkari sir and other people were there, and primary, I think the more requirement and more force was from Gadkari sir, Nitin Gadkari. So the question is coming from, again, Rishabh only. Apart from NHI, do you have got interest from other principals? Yeah, abhi chal raha hai, dheere dheere.
So lot of interest has come out, and lot of other like rather than the principal, I will say right now more of the contractors have approached us, and when we are understanding their requirements. So like I'll just give you an example. Yesterday I was discussing with somebody, and they wanted customs bond. Now that has not been allowed right now, if you see, and or certain people were looking in software. They have to give deposits when they are signing contracts. They wanted surety bond over there also. So a lot of people have interest. BG, as you are aware, sir, is available in almost all the industries. All the sectors are there. So people want it. But as of now, what like you rightly said, that ministry and that was the sector which was really craving for it, and that has been opened. That was devised with the regulator, and once the regulator opens up more sectors, we'll be more than happy, because that is good for us also. That diversification and the bond issuance in different sectors is a good thing for our product also.
एक क्वेश्चन मेरा भी आप ले लीजिए मानिक जी, particularly in infrastructure sector. You talked about principal, contractor, and the insurance company. Very fair and simple way of explaining it. But in infrastructure sector, we have this system of subcontracting. L&T contract लेगा, उसके बाद वो किसी और को दे देता है, वो दूसरे वाला तीसरे को दे देता है sector wise. So how are you going to deal with this subcontracting part in a big contract?
Sir, right now, if you see the requirements which are there, like you were talking about the roads or that sector, the bond needs, the bank guarantee is always of the party to whom the contract is awarded. So they need to provide it to the principal. Because the subcontractor, if you will see, the subcontractor has not signed a contract with the principal. So he is not a party with the principal. That might change, like in a private, if you go, or in some other principals, if we go, if that is the requirement, then for us, the evaluation is not only the contractor, then for us, the evaluation would also be of the subcontractor, because the bond could also be triggered by the work of the subcontractors.
Okay, sir. Pratik sir, next question. आप म्यूट पे हैं, म्यूट पे.
In fact, I said I see a lot many questions coming. In fact, the next question is from Manisha Patil, and the question that she asks is 2-3 folds. First and foremost, she wants to know what would be the premium impact, and of course, she would like to have a copy of the detailed policy wording. I personally believe, Manisha, that the policy wordings I'm sure would soon be in the public domain, or probably on the website of BAGIC. But the premium part question will be handled by Manik.
So on the premium part, sir, since like I showcased the underwriting, few of the major underwriting factors, the credit worthiness, firstly of uh, the contractor whom we are dealing with. Secondly, would be their technical expertise. Uh, whether now experience, now whether, let's take an example. If somebody was only having experience in roads, 10 years they've been doing just roads, and suddenly they come to us that I want to do a tunnel project. Now, if they do not have any experience of tunnels, the rate would vary because it's something new which they are. So to give you a ballpark figure is not there with me, but it would all depends upon how the financials, the technical, what is the duration of the bond? Is it 1 year? Is it 5 years? Is it 10 years? So it all depends upon the various factors. All combined together, one rate would come.
Manisha, please note that I tried my level best to get the figures out from Manik. He gave you an answer which was diplomatically correct.
Another question from Maya Pandey ma'am again, and that is very general question because we believe that this new product will be definitely very much reinsurance driven. So what could be the extent of retention by the insurer, Bajaj?
So there is, sir, see, it's something new which is there. Now it also depends upon the bond values. If you're talking about values of 1 crore, 5 crore, 10 crore, then there is no, like the reinsurance requirement would be much lesser. If you're talking about a bond value of 200 crores, 500 crores, obviously the reinsurance would be required by this. Secondly, the experience. So it is not only the capacity that the reinsurer is bringing, the reinsurers are also bringing the technical know-how. So because those are the guys who have been, like I highlighted the major markets. Now the guys who have been writing it over there, they have the experience, how it has performed over the years, how it needs to be done, what are the factors that needs to be validated. Certain factors would change depending upon country to country. The experience varies, the information varies, but a lot of learning for us also has come through this, from the way of interacting with these reinsurers, knowing their performance and the problems and the benefits of surety operating in other markets.
One question, general question, for the benefit of my students. Who are the leading player? I mean, the moment I'm saying leading player, I'm talking about reinsurers. Surety bond में leading reinsurer कौन से हैं?
So right now it is more on facultative basis, to be honest with you. So there are many players who are writing surety bonds. So like it's a $30 billion market I was highlighting to you. So the market is there. So many FRBs, they have shown interest who are in India, and the leading FRBs, they are showing, and they are also like, it's a good thing for the Indian market that the reinsurers who have set up offices and branches in India are now working for the benefit of our country and the insurance industry, that they are also ready to take those risks with us and provide us that support and technical know-how.
I saw some of the audience people raising their hand. Please type your question in the question answer session. I mean that option. We will take it up. एक क्वेश्चन और आया है मिस्टर KR विश्वनाथ. Can banks be able to take advantage of this surety bond to protect their interest?
That is not allowed, right?
Not okay. Yes, sir.
In fact, there's another question by Rishabh Sanghvi, and that is a question I think which each one of us want to know. Have you issued any policy of surety bond till, and if so, how many till date?
So we have given a lot of quotations right now. It is like I said to you, the principals, the discussions are going on with the principals because they had BG formats which were there, which were fixed formats. So the contractors have gone to their principals once all the commercials has been agreed. The wordings, we have tried to build it as per the contract, the requirements of the contractors. Now the discussions are happening with the principals. If the nod of the principals are there, then you would see a lot of policy getting issued. So the quotations have been there in the market. Many places we have provided the quotations. Contractors have shown a lot of interest. It is just the principle, because till now none of the principal has come out with the standard format of a surety
I guess it will take some time.
We are hopeful it should be very soon. It should come out. And once even with one or two government agencies come out, then sir, then it becomes a benchmark. You have examples to highlight to other principals also.
Right. Now I have another question coming in from Mr. Atmaram. It's a small question. Don't worry about it. He asks, will you also be taking collaterals, also personal guarantees?
Yes, we would be taking the collaterals as well as the personal guarantees.
Great.
I think much more curiosity is there on the pricing part. So Mr. Kunal is asking, across the globe, surety fee is between 1.5% to 2% of the project value. What can we expect this rate to be in India?
I'll be more than happy. I'll be more than happy if the same rate comes here.
But yeah, our corporate governance, particularly in the infrastructure sector, companies has not been doing that great. This is also a reality. सबसे ज़्यादा default तो वहीं हुए हैं पिछले 10 सालों में. So that risk will always be there.
सर एक क्वेश्चन छूट रहा है सर मिस्टर सागर कुलाये का.
प्लीज लीजिए सर. बिल्कुल मैं क्वेश्चन आंसर वाला देख रहा हूँ. मे बी आप चैट से देख रहे हैं. Please continue.
नहीं sir, I'm there in the question itself. Mr. Sagar Kulay would like to know what is the turnaround time from the time of filing the proposal to signing of the indemnity contract, tentatively.
So sir, what is happening is, because the bank has a lot of information. Now, if you will see, normally when you are coming for a BG, normally that bank also has given you a working loan limit. Your salaries account would be there. So there a lot of other collaterals are already there. So if you compare me to a bank, my time would take initially longer when I am evaluating a proposal for the first time. But the second time it would be much more faster, as I would have already done a lot of financial analysis, the assessment of so the only change form would be the technical contract, which I needs to evaluate, less on the financial side.
Basically, the due diligence part would have already been done by you.
Yes, on the financial side, since it is done. And another thing which I want to highlight is banks also provide facilities, loan facilities. We cannot do that. For us, as per the regulation, it has to be per project basis. I cannot extend, even if I do a financial analysis of somebody, I agree, I want to write, I cannot extend a facility or anything. It has to be per project basis, and on that basis, we would be providing our terms. Coming initially, if I have to say, it should take us around 10 days time for an evaluation, along with the quotation. And the formats and other things, once the commercials are agreed, those are quite standard formats. Those are already shared in the beginning itself. Once the financial evaluation is satisfactory for us, we do share the GAIs and the guarantee formats so that their legal team could also start working on it. And then it's just a matter of 1 or 2 days and can be finalized.
Yeah. In fact, I think that there's this question by, of course, Nivedita Jaiswal's question has already been answered, but because she wants to know on the pricing point. There's another question by Mr. Shetish Chidimar. He says, thank you for the presentation, Manik sir. Are there any benchmarks for defining the limit of the bonds?
So benchmark is on the, so if you will see how is bank coming out with the limits or the facilities they are providing, it is depending upon the financial stability, financial results, how much exposure we are ready to take on that particular corporate. And on the same basis, we would be coming out over here too, that, okay, if how much is the values, which sector we are writing, then how much on a particular client we want to expose ourselves. So I might be issuing 10 bonds to a particular client, but there will come a time when I won't like to take more exposure, because then it's going to be an accumulation. So suppose I have issued 10 bonds and tomorrow there is a financial distress, all the 10 bonds would trigger for me. So accumulation becomes a major element. And one of the reasons why the reinsurance becomes very important is for us. So we need that help to monitor our accumulation and help us out in the same.
Okay.
One question is coming from Nivedita Jaiswal. What kind of rating, etc., you are looking from the principal and contractor? Her question is, are we only looking at rated principal and contractor?
No, it's not that way. Not all the contractors are rated. See, why were they getting rated right now? Because the banks were also asking for it. So that's a help for us if a contractor is rated. So we are seeking for that, but it is not mandatory that a contractor has to be rated. Each contractor, their own balance sheet strength, based on that, we gonna be doing our analysis, our study.
Question again from Ashish Dhingra. Any tentative percentage of margin in realization to bond value BAGIC will be looking for to issue?
So I believe margin monies are more into the bank guarantees which are there. So they take collaterals. It could be cash deposits also. It could be charge on the properties, mortgage. So for us, it's we would like to be more towards the as liquid assets as we can be close to liquid assets. And then depending upon, I believe the question was much more how much collateral are you going to be taking. So after the corporate guarantee, if required, then we would be taking a collateral, and the collateral varies. Now that is where the financial strength comes. And even if you will see in a bank guarantee also, depending upon past relation performance, their overall business, the bank loan facilities available, how much collaterals there are, the margin money keeps on changing for each contractor to contractor, and that would be the same for us also, how much collateral we would require.
I think we have taken care of the question, sir. एक नॉर्मल क्वेश्चन फिर मैं पूछ लेता हूँ, मे बी डिफिकल्ट फॉर यू. कितना प्रीमियम उम्मीद कर रहे हैं आप इस बार, इस साल? इतना मेहनत किए हैं तो.
It all depends, sir, how it goes, how the principal accepts it, the market. So there is a market, the market demand is there. People have taken it very well. Now, right now is the stage of educating the principals so that they accept. The government did come out with a circular, but see, when you are going the first time and showing to somebody, a time it takes for the principal to accept, bring it in their contracts, the formats. So that is the stage which at what it is. The market is there. I'm pretty sure it would be a very big line of business in future for the insurance industry.
Again, diplomatically correct, sir.
सर फिगर कैसे बताएंगे मानिक जी की कितना टारगेट तपन जी ने इनको दिया होगा. एनीवे, बट इट इज BAGIC will always have the benefit of first mover. वो तो बेनिफिट आपके साथ रहेगा ही रहेगा. I think Gitanjali, now we don't have any further question. We have taken care of hopefully.
Yes, sir. Sorry, we can't take any more questions now because of the time ado. So I would like to extend my heartiest thanks to sir, and also invite Manoj Pandey sir, our mentor, Club Inmost, to give the vote of thanks.
So thank you, Gitanjali. As a mentor of the Club Inmost, I definitely would like to extend thanks to Manik ji for sparing his time and giving such a beautiful presentation, and also taking all the questions to best of its limitation, what we can say. Thanks a lot to Nikhil Bharadwaj and Sumedha, the team at corporate communication at BAGIC, because of their intervention, this particular talk show could be arranged. Thanks to the BAGIC team and the CEO Tapan Singhel also. He has also been a guest at many of our times for our platform, and bringing this new product to the market. क्योंकि किसी न किसी को तो इनिशिएटिव लेना ही पड़ता है. पहला आएगा, अब लाइन लग जाएगी होपफुली. कम से कम जो 2, 4, 5 बड़े इंश्योरेंस कंपनी है वो तो आ ही जाएंगे. And thanks to my students, and big thanks to all those people who are from the outside. Outside means, of course, from the industry itself. And they attended, and all these questions came beautifully. So thank you all for this. And again, thank you, Nehra ji, Manik ji, for your presence. And we really loved having you and interacted with you.